Good morning. It's Harvey Jackson from Exceed Grain Marketing. Just going to go through oil seeds and charts quickly. Actually, the market's up pretty nice today. We are up $15 on canola. Rapeseed is up 6. Soybean oil is up zero point 0.4 of a cent a pound. Palm oil is up a little wee bit as well. Crude oil basically flat, and soybeans up 6 to 5.5 cents. And wheat is up a penny to 3 pennies, and Canadian dollar a little wee bit up again. So uh, first off, let's just look at canola, and we've got a nice long green candlestick here, which is a good thing. We're touching the 10-day moving average, and you're going to see the significance of that as we move forward here in all the charts. And it's been a pretty good slide. It's a pretty steep slope of if you're going to go downhill skiing, it would be a black diamond kind of a slope for sure. With this big slope here. So if we look at rapeseed, it's on this move alone from the height that we've seen back in just the early part of July, a choppy movement and a good recovery above the 61.8 retracement value here as well. As you can see, if you're pricing rapeseed in Canadian dollars minus the price of Canadian canola, we're above this 100-day or $100 value, and that's a good thing if there's going to be any interest in our export market for Canadian canola. You can see how often that actually traded above the $100 in Canadian dollar value. We don't stay above it for very long, although you could say this time in this era we're up above it for a while, but it also creates some interest in buying. Rapeseed, just showing it a different way. Rapeseed priced in Canadian dollars versus the Canadian dollar priced canola. And you can see that we are created this gap that we're just show in a different way on the previous chart. And when we get back into the 2023 crop year, the gap was the other way around and no interest in Canadian canola, in other words, for export market, but this should create a interest for export market. As you can see here, soybeans actually has made a little bit of a bounce off of its lows that it kept on making, and it is trading into this 10-day moving average. If we can stick above that, it could be a trend change, but significance would be to get above this 78.6 retracement value, or even the last previous high it made on this height. So that'd be in that 1040 kind of a range of trade. So soybean oil, same kind of thing. It's actually made a little bit of a recovery to get back to 78.6. You would have to be 40.5 cents a pound. We're not quite there, and we probably have to get up to the 41.5 to say that we could potentially be changing this short-term trend. 20 or the 10-day moving average, we're trading right at it again. So there could be some one of the minor technicals is the 10-day moving average. The 10-day moving average, if you can trade above it for any like 3 consecutive days, it could be a trend reversal. So palm oil, I had this line in here because it touched other significant downside. Now we're trading above it, and if we can stay above that, that's a fairly good signal. Palm oil, if we just look at it from the beginning of May until now, palm oil is down 4.5%, rapeseed is down 4.5% approximately too, soy oil is down near 10%, and canola is down 13%. So we've lost a lot of traction against some of these other oil seeds and oils as well in relative value. So just to talk about related products, here's crude oil. Crude oil is trading in this lower side of this range, and the hope would be that it actually continues to trade lower, but seeing as we do have some connection to soybean oil used for biodiesel and the canola oil used for it as well, that a stronger crude oil might have some positive effect on canola. Canadian dollar trading right in the middle of this range, and I snapped close as I could without messing around too much. You got a 76 height and a 72 low, and we're trading at 73, almost 74 cents, 73 or 74.6, and there's probably another significance level rate just before the 74 cents as well to trade above it, and that would actually put some pressure on the Canadian canola as well. So let's just have a quick look at a couple charts on wheat. Wheat is grinding on top of this trend, and it's been basically trading sideways. If we look at it, it's back until June kind of scenario where in July, mid-July, we made a low, and we've been trading above that low for quite some time and touching and not breaching through it. So significance of that is we're trading sideways, and the longer it trades sideways, the less likely we would make some more downside moves. So just looking at it on the longer term trend, that we're going back to 2021 values since the last time we traded that, and you can see how we traded in those values in 17, 18, and 19 and below those values. This is our big leg up that we've seen. Milling wheat, it's breached the 78.6 retracement value and staying below it. We are not trading at the 10-day moving average. And again, what I'll mention here is your August 28th StatsCan report. It's going to be based on the near infrared imaging that was done in mid-July. That was probably the key and the best time of the year for the imaging to be done for yield. And I am leaning to think that this report itself will be possibly fairly bearish to the market of canola. And that's all I have for you today.